The election wasn't the only thing that weighed on the market today. Dominic Chu explains from the New York Stock Exchange.
The U.S. stock market took a turn lower on Monday, and it was the financial stocks that really dragged down the major indices. Among the worst performing stocks on the day, regional banks like SunTrust and Comerica, as well as bigger banks like Bank of America. Interest rates moved lower as traders bought the safety of treasuries, and lower rates have generally been seen as hurting bank profits. But a lot of today may have also been about the weakness in European markets, and specifically their large banks. You got German banking giant Deutsche Bank moving lower on reports that the government over there wouldn't be as likely to help the bank in its efforts to fight financial liabilities here in the U.S. Now remember, Deutsche Bank is facing a probe by regulators who may impose substantial penalties on it tied to the financial crisis and mortgage bonds. Wunderlich chief market strategist Art Hogan said it looked like Deutsche Bank sneezed and everybody else caught the cold. On the flip side, though, many energy stocks outperformed. Oil prices moved higher. Those oil ministers gathering in Algeria for talks on what to do about supplies. And election concerns also perhaps part of the story. Schwab managing director Randy Frederick attributed some of the market weakness today to investors lightening up on stock exposure ahead of tonight's presidential debate. Other traders, though, say it's a little bit too early to tell if the markets will be impacted by what's currently happening in the race for the White House. Now, regardless, stocks are weaker, Treasury bonds strengthening. September's been a rough month for stocks historically, so financial stocks will certainly be ones to watch in the coming weeks, as well as energy. For Nightly Business Report, I'm Dominic Chu from the New York Stock Exchange.